Okay. Good morning, everyone, and welcome to today's special session on the ICICI Prudential Nifty Private Bank Index Fund. We are joined by Mr. Amit Vashisht, lead for ETF business at ICICI Prudential AMC. With over 15 years at ICICI Prudential, Amit has led multiple divisions from digital distribution to ETF product strategy, making him one of the top voices in India's passive investing space. Today, he will walk us through his new NFO focused on India's high performing private sector banks. Over to you, Amit.
Thank you, Neha. Thank you for inviting me for the session. And again, I want to compliment you guys for focusing on the passive these days. Very few people are talking about passive. So definitely this session will give a lot of information to the clients, not about NFO, but we'll talk about how passive also be playing a big role in mutual fund these days. Thank you. Thank you for the invitation.
Great, amazing. Thank you so much. So let's keep this webinar a little conversational, right? So that it's engaging and it's not boring. So to start with, I will be asking a few questions, if that's okay.
Yeah, please.
Yeah. So can you start off by explaining what is the ICICI Prudential Nifty Private Bank Index Fund and what investor problem does it particularly aim to solve?
Sure. So as the name highlights, so generally whenever you hear any passive scheme, within the name you understand what it's scheme talking about. The passive scheme does not have any fund manager. So as the name says, it's ICICI Prudential Nifty Private Bank Index, which means it's going to replicate Nifty Private Bank Index. So being a passive, it's just replicating the private banking index. It will be a low cost, efficient, and a transparent scheme. So when I transparent scheme, you know what you are buying from day one. You know the portfolio. Whatever the realignment, you can see that because being a passive, it's just going to hug or replicate the Nifty Private Bank Index. So what is going to sort out? See, currently the biggest sector in Nifty is private banking sector. So now if you want to play a bet on a sector which is the biggest in the Nifty, easiest way is to use this as an index. That's a basic help that one can find out if you want to play a consolidation bet, believe in the private banking growth story. This is the easiest way to buy the top 10 private bank stocks in a single go.
Okay. Okay, so what makes private sector banks such an attractive sector to isolate in an index fund today? I know you did touch upon it when you answered my first question, but if you could go into detail, it would be great.
Sure. So we generally track Nifty 50 because Nifty 50 is again the large cap universe of India. So Nifty 50, it's majorly cover more than 70% of the market cap of the India economy. So if you talk about Nifty 50, within Nifty 50, the 28% weightage is to Nifty Private Bank, which is huge. Almost more than one fourth of the weightage is for the Nifty Private Bank. With 28% in Nifty 50, they contribute 37% in the profitability of Nifty 50, which clearly shows that this sector is not just being a decently placed in Nifty 50 in terms of weightage, it is outperforming as well. With 28%, the profit margin is close to 37%. So if you're investing into this sector, you're investing into high growth sector, a growing sector with a much more profitability compared to the Nifty 50. So that's one clear indicates that why the sector is lucrative, why people are looking into the sector.
Right, right. So, can you also explain the key fundamentals of driving the performance of private banks like NII, NIM, market share gains, and low
Sure.
NPAs and all? Yeah.
So when about net interest income, so it has almost increased from 50,000 crore 10 years back to now 3.5 lakh crores. So it's almost 7 times. And I have improved. If you talk about net interest margin, that's also improved in last 10 years. It was around 2.6%. It's now 4.6%. So net interest margin also improved. If you talk about the loan market, 20 years back, the loan market of private banking was just 13%. It moved close to 20% 10 years back, and now it is close to 36%. So within 10 years, it has improved from less than 20% to 36%, which clearly shows that this private banking is keep on gaining the market share in the banking space. If you talk about net NPA, so it is 10-year low. So NPA generally believe that non-performing assets, it should be lower. So it's a 10-year low of 0.5%. So NPAs are low. Your net interest margins are higher. NIs have improved. Your market share in lending has improved. Loan market share improved. FD market share has improved. So it clearly shows that within a banking sector, private banking is growing rapidly. So that's one clear indication that if someone wants to play on a banking sector and a sector which is growing, Nifty Private Banking makes sense.
Right. Okay. So when it comes to constituents and performance, right, could you please explain how Nifty Private Bank Index differs from Nifty Bank or Nifty 50 for constituents and performance?
Sure. So Nifty 50 is a free float top 50 stocks. So when we say free float market cap, which means the company, the stocks which are available for the trade, which is a secondary market, we remove the promoter holdings. Then whatever the holding left are called free float market cap. So Nifty 50 is basically the top 50 companies of India in terms of free float market cap. So that's called Nifty 50. Now, what is banking? So banking, Nifty Bank includes all banks, whether it's a PSU banks, whether it's a private banks, whether it's cooperative banks. All banks form the constituent of a Nifty Banking as a sector. Nifty Private Banking only covers the private banking sector. There's no PSU and cooperative banks in this. So this is how this separate from Nifty Bank, and this is how it separates from Nifty 50.
Okay. Okay. Could you also walk us through the stock selection and capping methodology for the fund?
Sure. So the universe will be Nifty 500. So out of those Nifty 500, the stocks will be filtered out. Top 10 private bank stocks will be part of this portfolio. So it's a considered top 10 stocks. One stock cannot be more than 23% of the weightage, and top three stocks cannot be more than 62%. So, which clearly indicates even if the largest of the banks might grow much faster, we want to rebalance the portfolio. So, we don't want to be concentration risk. That's why top three, obviously, like ICICI, HDFC, Axis are the big banks. But still, to make sure that all banks get a decent participation, the capping is there. So it give it diversified again with the diversification, concentrated went on the private banking as a sector. The realignment and balancing happens every 6 months.
Okay. Okay. So how has the Nifty Private Bank Index performed historically, especially when compared to broader indices like Nifty 50?
So this sector has done pretty well. In fact, talk about 3 years, you talk about 5 years, you talk about 10 years or 20 years, it has always within this period, it has given a good double-digit return. Within 3 years, if you talk about last years, it's close to 20% CAGR. Last 5 years, talk about it's close to 19% CAGR. Last 10 years also, it's close to 19% CAGR. Last 20 years also, it's a good 14.5, 15% of CAGR. Compounding with this, it's a super performance we talk about as a sector. In fact, in last 10 years, 6 out of 10 times it has outperformed Nifty 50. So it's a good performing sector, good growing sector to talk about.
Okay. And could you shed some light on what kind of investor is this fund most suitable for and what role can it play in a diversified equity portfolio?
So we feel any investor who thinks that he wants to take some sectoral bets and he wants to play a sector which is not a small sector, which has shown its performance in the past and which they feel can do better in going forward. So this is one of the sectors they can look for because this sector has constantly outperformed Nifty. And it's not a small sector anymore. It contributes almost 28% Nifty 50 weightage, 37% of the profitability of the Nifty 50. So it's a very relevant sector. So anyone who wants to take a sector bet and a sector which is growing, they can learn to it. Anyone who's looking for the India growth story, who thinks that these that we are still into a growth phase and private banking are still growing in the India economy, they can think of to play in this as a sector.
Okay, interesting. From a cost and accessibility standpoint, how does the fund make investing in private banks more efficient?
See, when you're buying a Nifty private bank index, the best part is you're just buying top 10 stocks. And being a passive, it's a low cost, low effective fund. So there's no biasness on particular stock, but it's not managed by any fund manager. It's just going to invest into private bank story, buying to only private bank with again a model base, which clearly says that one stock cannot be more than 24%. So if larger stocks do very well, it participates, but again, to avoid the concentration risk, it'll come again realigned on a regular rebalancing date. So that's one thing. You're buying a low cost, low effective fund with the pure story of private banking. You can use SIP, you can use SWP to run this, or you can just do lump sum with the low cost, transparency, and a cost efficient way.
Okay. So can non-demat account holders also invest in this index fund? If yes, how can they get started during the
So
NFO?
it's an index fund. So when we talk about passive, you can invest into two ways. One we call ETF route, one we call index route. So we already have a Nifty Private Bank ETF available. So we have now launched Nifty Private Bank Index Fund. So the investors who are comfortable with the Demat accounts they can use Nifty 50 Private Bank ETF, which is available on the platform. The investors who are traditional mutual fund investors and who feel that they love to do SIPs, they want normal investment, easy way, then this fund is available without any demat. You can invest like any mutual fund or any platform. Either you can reach out to your advisors to invest through it. You can use our website. You can use fintech platforms to talk about any fintech platform available in the market from Grow, Zero of the world, whatever you feel like. So it's available on all the platforms.
Okay. And finally, my last question. What are the NFO dates, minimum investment amount, and any key operational details investors should know?
Sure. So the fund is opened on 1st and it's closing on 14th. And the minimum ticket size is 1,000 rupees. You can use SIP, SWP. All features are available in the scheme. Just like a normal NFO, all options are available for these 14 days. You can invest. Suppose that once NFO is open, you again can easily invest into this as a scheme. And being an NFO, then you will be 10 to start with. Uh, the thing just keep in mind that if you're buying this, it will be a concentrated top 10 stocks, and it will not be a typical Nifty 50 in which you get a full diversification. But again, with the concentration, you have a higher chance to generate alpha also if you feel that this sector do well. We feel that private banking has done well in the last 20 years. It's doing pretty well. We track our ratios. All ratios we highlighted is doing pretty much in favor of the private bank index. The parameters we should track in the private bank index, from the margin, from the lending feature, from the FT features, all those features we should track. They are growing steadily. The sector is growing steadily. The most profitable contributor sector in the Nifty 50. So these are some of the things which we feel that make sense. And someone wants to take some portfolio into sector, then this is the one sector one should take into as an exposure. That's what we feel.
Okay. So you have answered all my questions. Do you have anything to add, Amit?
See, I just want to add a lot of passive things are talking about, and I'm happy that people are now listening on the passive. But we suggest that we should look into the liquidity also. Like if I talk about Nifty Private Index, again, it's a large cap oriented, so there is easy liquidity available. So lot of passive space. If you buy, you just think that the liquidity should also be there. So this particular sector gives you that comfort. There are a lot of small cap and micro cap stocks. So we generally avoid to launch those kind of index funds and ETFs in the market. So that's the only thing when someone look into passive. Obviously, you look into sector, you believe that this too will well. That's the most important criteria that you're investing into those sector ETFs or index funds, or even if you invest into market cap index funds like Nifty 50, Nifty 100, whatever you choose, the first criteria was definitely you want a better return. But in passive, just keep in mind that if you're investing into a particular fund, is liquidity available? Like in large cap, large and mid, there's a liquidity available. In fact, in a diversified Nifty 500 also, you find a decently liquidity. But some micro caps, you might find that liquidity might not be there. So just keep that thing in mind while investing into passive as a space. Everything else, passive is perfectly to be part of your portfolio, clear, crystally, you know what you are investing into, you know the portfolio, and you're getting at a very cost efficient way. So that's it from my side.
Okay, thank you so much for adding to that. Very, very insightful. So to end it off, thank you so much, Amit, for this interesting and insightful walkthrough of the ICICI Prudential Nifty Private Bank Index Fund. Your perspective on the sector's fundamentals, risk profile, and long-term investment case was truly valuable. And to everybody that joined us, thank you so much for your time. And stay tuned for more such sessions to help you make smarter investing decisions. Until next time, happy investing.
Thank you. Thank you, everyone.